Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, January 26th, 4:40 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, uptrend. Uptrend got a little stronger today. Still cautious. Need to see what happens with the big tech earnings next week and also the FOMC on Wednesday. You can see over here on the trend gauge. Leaders acting just fine, showing uptrend there. Short-term 21-day moving average, all of the five major indexes are trending above there, so we're bullish there. Medium term, all five above the 50-day moving average, bullish there. Long term, believe it or not, the NASDAQ 100 made, it was close, but it did close just barely above the 200-day moving average at the end of the day. That puts all five of the indexes above the 200. Slopes of the lines still lower, though. That's a critical factor that needs to be remediated. Time will take care of that. But for now, definitely good stuff with the NASDAQ making its first close above. If we get a weekly close above there, we'll slide this arrow a little bit over here to bullish uptrend, but keep the overall trend at neutral until the slope of that line turns higher. So what happened today? Gap up in the morning, and then faded to flat. The gap up was primarily due to some strong earnings reports, especially Tesla, as Tesla had a strong gap up. But as I said, that gap up faded to flat, but a strong close. After 11 a.m., we just trended higher highs, higher lows into closing near the high of the day. And of course, as I said, putting the NASDAQ 100, which is the leading index in 2023, big change from 2022. First close above the 200-day moving average. G6, our growth composite, up 1.19%, S&P up 1.1, NASDAQ 100 up 1.95. Dow continues to lag, up 0.6, mid caps up 0.86, Russell 2000 small caps up 0.67. Global diversified 60/40 stock and bond up 0.42. In-house GROTECTION up 0.72. Let's get right into the charts. First, a quick explanation about what we do here at Revere. Trend following is what we do. We assess the major trends across 3 time frames on the 5 major indexes, and then take a look at how leading stocks are doing. Ideally, we want to be trending with the short-term 21-day green line above the 50-day red line. That's the intermediate term. We had that cross yesterday on the S&P, so a positive there. We want to get both of these above the 200-day moving average, and we want the slopes of the line to be all going higher. That is a fully bullish market when the indexes are trending above in that order, in that configuration. When that happens, we are fully allocated into the market. Market doesn't always stay like that. Sometimes it has gentle pullbacks. Sometimes it has intermediate pullbacks. Sometimes it has harsh pullbacks. The worst are when we break the 200-day moving average. That's the black line. That's when we get to a maximum defensive state, as we've been in most of 2022, as we trended below the 200-day moving average. And the reason for that is because all severe bear markets occur below the 200-day moving average. You don't know when you get under there how bad it's going to get. But with the various economic factors weighing, we had very easy monetary policy that caused a bit of a bubble. That bubble started to burst back in January of 2022. We broke below the 200-day moving average early in the year, and we ended up pulling back 27.5%. We need a 38% gain to get back to even. Now above the 200-day moving average. So when that happens, as we get above the moving averages, we put more and more capital to work. This is the best setup that the indexes have been in since we first broke back below it over a year ago. We had just a couple of a day or two above the 200, and making higher highs above the 200-day moving average on the S&P now. Not something we did going all the way back to until March of 2022. So good stuff there. Let's look at a 5-minute chart. Today's action, the gap up. Here's the pullback, 2 legs down. We held that 4007 Fibonacci level that I'm showing in the tail of the tape. You can see how we held it here on the pullback, broke below it, reclaimed it yesterday after the gap down, tested it today, held it. That's good stuff. We've got two big fib levels, 39.99 and 4007. We want to hold those on any pullback as well as the moving averages now as we pull back. But you can see closing near the high of the day. Nice, strong trend up after making lows of the day before 11 o'clock Eastern time. Good stuff on the S&P 500. Let's go to the NASDAQ 100 now. You can see very similar action, pullback, rally, pullback, put in the low of the day, and rally into the close. Let's go to the daily chart here so you can in fact see that we did close 0.2% above the declining 200-day moving average. Again, we do need the slope of all of the indexes. We need the slope to flatten out and then work its way higher to build confidence in the market. Let's go to the Dow Jones Industrial Average, the leader throughout 2022, having a tough time in 2023. 3 ping pong days back and forth around the 21 and the 50, breaking out above there today into the 34,000 level. How about mid caps MDY? Mid caps, new closing high here, lagged most of the day, but strong into the close. And small caps also lagged most of the day, but showed some strength into the close. You can see here new closing. Well, is it a closing high 188.57? The highs back here were 189-ish. The close 188. So yeah, it looks like a closing high going all the way back to September of last year on the small caps. Good stuff there. You can also see the 21 came up through the 200. The 50 is working on coming up through the 200. Those are bullish signs. How about equal weighted S&P 500? A lot of talk about that last year. Not as much this year since the large cap Nasdaq 100 stocks are regaining their explosiveness to the upside. Equal weight only up zero point 0.8 today, lagging the 1.1 move up on the heavy cap weighted QQEW, up 1.6 versus 1.95 for the overweighted NASDAQ 100. We're probably going to stop talking about this. It was a big deal for a while. Everybody was saying, you need to go overweight. You need to go over it. Well, as soon as everybody piles into the overweight boat, that boat's going to capsize and the large cap has reasserted itself. And how are we going to know if they continue to reassert themselves? Because of our relative strength line here trending higher. It's blue. It's trending higher along with the moving averages. We hold the moving averages and the relative strength line continues to go up. That means the big cap NASDAQ 100 stocks are leading higher, and that's typically what you see with a rally. How about a couple of more key indexes? Let's start with the VIX. Down again today, continues to trend below the declining 21 and 50-day moving average. That's a tailwind for stocks. How about the US dollar? Stocks weakened today while the dollar strengthened. That's this period here, but then the dollar started to come off. What happened when the dollar started to come off? You guessed it, stocks started going higher. So that inverse correlation is still intact. Strong dollar, weak stocks, weak dollar, strong stocks. Let's check bonds. How about the long-term TLT? TLT down 0.47% today. That means that yields, prices lower means yields higher. We'll take a look at the yields momentarily here. Let's shift over to the broad bond index, BND, also down 0.19. Junk bonds, JNK, positive on the day. These correspond more with stocks than they do with bonds very frequently. And corporate bonds, LQD, down today, but basically flat. 30-year yield, TYX, 30-year yield, just up slightly today. 10-year yield also up 0.9, still trending below the declining moving averages. And then finally, let's go to gold and silver. Weak on the day, as weaker than uh, the dollar was strong. So GLD undercut but reclaimed the 8 EMA as it continues to hold that trend line for 5, 6 weeks now. GDX lagged, but an inside day has been very strong. Normal reaction, normal pullback, and with the dollar closing higher, not a surprise. And finally, silver SLV. Silver slightly positive today, putting in a handle in this big cup and handle. Bitcoin BITO up 1% on the day, putting in a tight range now after a move up since the market turned and Bitcoin turned to risk on back near the beginning of the year. So those are the major indexes. Let's check the tail of the tape now, and then we'll get to our focus list. We're leaning again toward the bull case. The bear case barely hanging on here, and it really, after we get confirmation from the big tech earnings next week and the Fed, this will likely go away if we continue to trend above all the moving averages. A little bit of news pre-market: GDP up 2.9% versus 2.6% expected. Does that mean we're going to have a soft landing? The market reacted to this data when it came out, positive, near the highs of the overnight highs on the futures before selling off shortly after the open. Day count now 3 out of 5 up. This is our 5th day above the 8 EMA and the 21 EMA. Fed funds futures looking at a 99% chance of a 25-point basis hike next Wednesday. Expectation positive coming into today as long as we hold over that 4,007. Did hold on the pullback, and the strong close reinforces the positive expectation outlook. One thing I really liked about today, this resistance area 4040, we got above it and then failed. Let's go back to the S&P. So you can see how resistance flips to support even intraday. 5-minute chart here. You can see actually it's easier on a 1 minute, but I don't know that we're going to go. Okay, so 4040 is the level I'm talking about. We gapped above it, pulled off, then tried to get, we didn't gap above it. We opened right on it, rallied above it, failed. Then we rallied into it, failed, into it, failed, into it, failed, into it, got above it, pulled back, and it held 4038, close enough. Undercut and then rallied off of it, pulled back to 4040, pulled back to 4043, 4044, 4047, starting to make higher highs. So that 4040 resistance level, which was the high on 123. That's why it was a critical level, 4039 on 123. So that level overcome today. Any pullbacks in the afternoon flip that 4039 to support. So now we take a look at that. So now that 4040 resistance level goes to a support level. The next level up is 4101. Which is the highs that we made in late November and early December. Back to the tail of the tape. Let's see what was strong, what was weak today. We talked about dollar up, yields up, KWeb up, CKY, Chucky. Those are the 3 tech sectors strong. Gold, silver, and gold and silver stocks weak. Silver actually positive, but it did close positive, but it did lag. Biotech weak, coal weak, oil services started out weak, but by the end of the day, they finished positive, although they did lag the index. And then XLP and XLV finished positive, but lagged. XLP finished negative as those staples continue to get pounded. Let's take a look at that high beta, SPHB. High beta ETF. Look at the relative strength on this, making higher highs, and compare that to SPLV, low volatility. These are staples, dividend type stocks. Terrible relative strength or serious relative weakness. Complete opposite of what you're seeing on the indexes here. It reinforces that we're looking at a risk-on environment when the weakest or the most defensive sectors are lagging in a major way. Gives us more conviction to go into the growth names that we typically traffic in. So there's our focus list. We'll look at those momentarily. A couple trades stay added to our Boeing position and bought a small position in Tesla after the gap up, raising our beta from 0.93 to 1.01, so basically right in line with the S&P 500 today. Bottom line, it's positive. Gap up, reverse to flat, and then rallied to an 8-week closing high on the S&P, Nasdaq 100 over the 200-day moving average. Next level up here is 4,100 for resistance. So let's get to the portfolio, which is everything that we owned. We go through, talk about our thought process, see what we're doing here. XBI lagged today, but it's a normal pullback after 4 days up. Hit 90. Um, Nothing to be concerned about on lower volume also, although, as I say, ETF volume doesn't mean as much as it does in individual names. GDX inside day, lagged on the day, holding the ADMA, but an inside day, perfectly normal action. They don't always go up and beat the market every day. OIH had a strong close, lagged most of the day, closed near the high of the day, up 1.43. I didn't realize this closed up as strongly as it did. That's nice. We've got a 4% position in this. So those are the 3 ETFs that we own, and then we own 5 individual stocks in addition to the 55% equivalent exposure that we have to the major indexes. So here's Boeing. Gap down early, closed near the high of the day. You can see on a 5-minute chart here. Started weak, strong, and then just flagged into the day. Buyers came in after the sellers tried to break this lower. That's what you want to see out of leadership stocks, and this is a big liquid leader. Hasn't made higher highs yet. Kind of a 3 weeks tightish pattern in here, holding the 21. Looking good there. First Solar. The volume wasn't there today, but the price action sure was, up 4.26%. 26% below average volume. The up volume higher than the down volume the prior 2 days. One of the problems, is that the rest of the solar stocks not really acting well. Array, very volatile stock, not one that I can stomach. Down 5.4% today. Big move down there. SHLS, another one I was looking to get into if it got above resistance level, but this 30 acting as resistance. Big move down today, 5.8%. Below average volume, but close to, but only 8 on 16% below. And look at the TAN ETF. Not quite the strength that you would expect to see, although you could argue this is just putting in a little bit of a handle, although that's really too choppy for me. There's some serious underperformers and the one big outperformer is First Solar. Enphase continues to just be the south end of a northbound mule. What else do we own here? Shopify. Considered adding to it today. A little too extended to add to it. We're keeping our current position size on this. Pulled back, but closed near the high of the day. Good stuff there. JP Morgan. This is our second smallest position after Tesla now. It's doing what we wanted it to do after we bought it. Unfortunately, we had to put up with 3 days of a sell-off and a hold of the 50-day moving average before it started acting right. And Tesla was what we added today. Big gap up above the 50-day moving average. Let's look at the intraday action here. Gap up, faded to this 155 level, made another run, pulled back again to 155. When the stochastic flipped at the bottom here, this is where we got into it. And we're in, I think, around 156. So $4 up on Tesla as of right now. Any pullback should hold the lows of the day, a little bit of overshoot to touch the 50-day moving average. The 50-day is starting to flatten out, and we'll want to see that. Tesla, one of those big stocks, the growth is still there. Elon Musk talked about some good things that put the analysts at ease on the conference call, the earnings conference call last night. So we'll see. And pay no attention to this 7RS. Take a look at uh, what about the 3-month RS? Well, what am I saying? It's still a 10, but that didn't update after today's numbers come out. So we'll see what it is tomorrow. But you can see the strength off the volume, and it's off the bottom, and it's up 60% over the last 3 weeks now. Tesla. Okay, so that's it. That's everything that we own. Couple more that we want to comment on. Las Vegas Sand, a leader in the 21 over 21, big gap up on earnings with volume up 6.1%. Mercado Libre failed its breakout twice over the past 2 weeks, but it succeeded today on 48% above average volume, up 5%. Mobileye reported earnings, and this thing is just all over the place. Gapped up to highs. Look at the 5-minute chart on this. Gapped up to highs, immediately gave it all back, and then just chopped the rest of the day trying to form a range here. If you buy this, this is something you want to buy on the pullback to a moving average. Very volatile. PDD, beautiful breakout today after extremely dried up volume over the last 2 days, above 100 and closed near the high of the day, up 8.5%. RVNC, cosmetic therapeutics, pulled back after breaking out for 2 days. Nice move today, up 4%. And finally, ALB. Started looking at this last couple days when it came back above the 50-day moving average. Big gap up, closed at the bottom part of the range. This is 5 days up, not something you want to chase. It needs to relax a little bit. And that's it. As always, love to hear from you. The email, don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. Or my partner, Dan Stewart, dan@revereasset.com, the king of all things financial. We've got our podcast tomorrow. Looking forward to that. That'll be on YouTube Friday afternoon or distributed via email Saturday morning. Look for the updated 21 over 21 list in my video Friday night. And that's going to finish it. Remember, it's not how much you make in the markets, it's how much of that you can keep. So stick with us here at Revere. Track the market above 3 time frames, across 3 time frames. See what leaders are doing. Make sure the wind's blowing at your back. Keep your losses small, and you'll do fine in the market. So, wrapping up Thursday, January 26th. This is Don Vandenbord. Just the facts here at Revere. Telling it like it is. We appreciate you following. Thanks, and have a great day.